service on ElliottWaveTrader.net. You can check us out if you're interested. We do free trials with no credit cards, so you can just check it out, put your email in, and at least do 2 weeks before we ask you to pay up. You will end up on some marketing email, but there's not a lot of hounding, not a lot of pressure. You know, I find in my service that different types of people do well with it, and some folks don't. You do want to be trader minded, especially in crypto, if you want to get something out of it. So I'm trying to think back. I was looking at where we were at the last monthly public webinar. I've been warning about a crypto bear market. Of course, I was looking for a top at 125K starting in 2021. Yeah, that's pretty much what's happened so far. So we'll see if we are going to hold that top or not. So we hit 124,500 and then bounced down and then came back up and formed a failed top or B-wave top in Elliott Wave speak in the 126 region. So we tried again, and that was, so far, we've had a really strong rejection off that level. So I continue to lean bearish. I continue to lean towards potential that over the next few years, Bitcoin will hit $10,000. I want to say very clearly that I should back up and say, okay, none of this is financial advice. I'm also to say that, you know, especially I've had pretty much every major turn in crypto. I don't want to say nailed, that's a really strong term, but done very well picking tops and bottoms. But at some point in time, I'll be very wrong. And but the one thing about me is I'm honest about it and course correct. Right now, it looks like that 125K is level, or 126K, whatever you want to call it, that region is going to hold. But we'll see. We'll see how things roll out. I think I'll jump into, first of all, I think jumping in, given that we've struck a major top, we were down 25%, right? Or just about, actually, but more than that. So that's pretty major. I'm going to zoom us out to, let's see, hopefully I got the right chart. No, I don't have the right chart up. Sorry, give me a second. There it is right there. Oh, I had it here. Okay, no, I had it right here. All right, so, you know, just to catch you guys up on, you know, what I've shared months back is what am I looking for at this top here. I consider this top of the primary third, although in Bitcoin's history, there's a lot of difficulties in Bitcoin's history in terms of Elliott Wave theory. So at some point in time, I do actually assume this count will be wrong in some regard. I have, you know, other alternate views, but I'm using my primary here. But assuming that 125K holds, I'm looking for a drift, at least a minimal at 55K, okay? And then ideally 10K. That 10K may not be seen for a few years. And by and large, the basic expectation, and when I say basic expectation, it's here's a thesis, and then let's see how the market rolls. But we largely should be in a range over the next, could be even a decade potentially. And even in the middle of it, these B-wave rallies are very common SPX, common in Bitcoin, although on a smaller scale. And so we could have a very extreme rally right in the middle of this overarching sort of sideways movement that happens over many years. Now that's a thesis, okay? So how this gets proved out, it's going to be level by level, okay? As I've said in past webinars, 75,500 is the first level where it confirms some level of some degree of pretty serious bear market, and conversely 75,500 can also hold and then give us another high. And I wouldn't be too surprised if the high gets up into the 175 region, although another high above 126K would more likely go in 40K. So there's still a lot of, so again, my backing up to where my leaning is, I lean that a major bear market is underway, but I don't have a lot of proof in price action. So, you know, I always say, well, I'm not the only one that says this, not original to me, but I have strong opinions that Lucy held. I want to let the market prove me right or wrong so that I move with the market, not with my opinion, okay? A lot of folks out there had a lot of discussions of late around people looking for crystal balls, looking for certainty in markets. There's never certainty in any market. We are using typical market structures and having to, and they flux. And I also liken market to a series of feedback loops. So one action creates another action as investors respond, and and often respond outsized from the behavior that the market provides, and so moves the market to extremes. So it's just just understanding all of that, and understanding that we swim in a probabilistic waters is super important. And I'll say this: if you embrace that, you're going to do better as a trader investor versus somebody who's looking for that crystal ball, that super high win ratio. Again, I trade with somewhere close to a 50% win ratio. Sometimes it gets under that, sometimes get over it, but I can pull off profitability with a 30% win ratio at times, which has happened fortunately rarely. But I do that simply because I generate skew in the trades where the wins are much bigger than the losses. So you don't need to have a high win rate to and always be right to be successful in markets. You have to learn how to be in control of your P&L. All things I teach. All right, so that's the lay of the land. We're going to see how the market rolls now as we dive into the more recent action. Just play by play. I believe we were somewhere up here in the last webinar, right? So roughly looking at time frame, the last public webinar, we were in this region. And what happened since then is, I recall having a support region in this area at that time too. Tell me if I'm wrong. But what happened since then is this rally stayed correctively, okay? And not only have we had if you're an ICT fan, which I am as well, ICT got a nice liquidity rate above the stops in this area, and then we had a failed high. So another, it's basically the same thing as this region played. And look at this, we have another version of it right here in a smaller fractal. So liquidity rate, failed high, and then breakdown. So that's where the market's mood is at. I mean, we're having, runs of the shorts, and then eventually proving those shorts right, but just ill-placed stops, right? That's basically the mood of the market right now, and it continues to go lower. Now, what's happening next? Now, one thing I want to say very clearly is that I still have one short tranche of perps on. I took 3/4 of it in profit yesterday. Most of that was put on in the 114Ks, so it's been a nice run on the short side. But what we have now is if we go to, let me swing over to this chart real quick. If we look at the one-day RSI, we're down in the 30 space, which if you go back in Bitcoin's history, we at least should get a corrective rally soon. That certainly can go below 25, which I estimate that a move to a 30 RSI of 25 on the daily will take Bitcoin down to 88K, so another 7K lopped off of it. But regardless, I'm in a region when I consider, from a technical basis, a nibbling spot, nibbling on the long. So I'm not putting on a margin. I still actually have, in terms of margin, still have one short tranche on, which has a target of 92, and that'll come off there, and a stop of 101. So, and that will be profitable for me because it was taken on, that last tranche, I think, was in the 108 region or something like that. So that would be, nominal profit. So locking in profitability on that short side while nibbling on the long side. Okay, so that's where I'm at from a tactical basis. And then what will key is once we find some footing in this area is whether that rally is corrective or impulsive. And going back to motive wave, this is the basics of the count. Because of the technical washout that we have in Bitcoin, I'm not necessarily tied to seeing all of these waves all the way down into the 83K region. But we can also see a lot of liquidation flushing and scared people running it down to 75K support, which is the blue box down here. So there's a lot of range that's possible in here when the market is in this condition. There's fear forming, but it's not fully formed, right? Once it's fully formed, we might get a lot of people who run for the hills, right? So that can create an intense flush. And in this situation, I will be buying that flush carefully, okay? No leverage, right? So this is what I'm doing with tactical basis. But once we have some footing in here, the question is whether we're going to set up let me get us set up here. Let me check the video's working, everything's working, okay. So once we find footing in this region, again, estimated to be the 83K region, but it can start now, okay? No sign of it, but it can start now. So once we find that footing, the question will be whether we follow the impulsive route. Let me get this out of the way. Impulsive route to a 140K, okay, and we'll see a nice clear 5-wave move. and a 1-2 setup. Okay, so higher low here. There's a big, there's a big difference between the way this should show up and what showed up out here, which clearly was corrective all the way through. That kept me out of the long side, except for maybe some nominal trades here and there, and leaned me towards continuing to short. And if I see this sort of action off of this low in this region, I'll be back to short. But if we see an impulsive rally, I'm trying to think the last impulsive rally we had was here. Okay, and even that's barely impulsive. So but at least we should be 5 waves in this wave 1, wave 2. So that's what we'll be looking for if we want to see another high out of Bitcoin. But if it starts to fail and it's clearly corrective rally, I will want to be back to short. And so these longs that I'm putting on now, and again, nibbling, no leverage, will be short-lived. Okay, and to be very clear, my preference is that it is a corrective rally, gets us a B here, and the next move is, it doesn't have to go this deep, but it should take us down to the test of 55K, which is the red count on my long-term chart. 55K to 30K can set us up for $1 million run. Okay, I'm not saying that's my expectation. I'm only saying that it can. Okay, and the setup will be clear when it does. It should be. All right. So that's where I am at on Bitcoin. Again, I don't mind seeing the market bottom anywhere from here, way up at 95K, all the way down to 75K. I think that would be very extreme. Nominal target is 83K right now in terms of the micro, but anything goes when the fear starts to rumble, right? It starts to build up. You can fear builds up, and right now people are still talking about the bull market not being over, so they're not even really scared. Okay, and that's a very good, when you're down 25% and folks are not phased by it yet, that's kind of a good sign of a bear market, right? They're not fearful yet, right? The bear markets or even bear moves or bear markets end on fear. We don't have a lot yet. Maybe the fear and greed scale is up. I don't know. I don't really look at that. It's kind of terribly unuseful to me. But from a qualitative perspective, listening to the podcast, seeing what's going on Twitter, still a heck of a lot of bullishness. Yeah, there's not a lot of great action in altcoins, and Bitcoin seems to be leading the way down right now. What else to say about this? Yeah, so watch that fear to build and be careful of liquidation. As if you're nibbling on the long side, just note that you could get a big, we haven't seen a giant candle down of the level that we could have if the fear really builds up to a point of either liquidation or just people running for the hills and the exits because they finally have reached the point of recognition. I would say a lot of people get very fearful once they see this low break, because if you look on the chart, it's pretty extreme low. It's actually very important from an Elliott Wave perspective as well, because it's the last fourth that we have. And as I've said in previous webinars, that would be the first sign that we're going to have a bull market breakdown in the long-term bear market. So that's a point to watch there, and that's where my 75,500 support is derived. All right, so I'll take questions now. I'm going to go to Ether. This webinar may be short if you guys don't have a lot of questions, because I've pretty much said my piece on Bitcoin, and I'm only going to go Ether and hang up. But feel free to take as much of this time as you want for questions. And just the only questions I won't answer is pulling out some chart that I don't have set, because I intended this webinar to be pretty brief. Any questions from you guys on Bitcoin? I mean, especially I think unpacking, this is where a lot of people struggle, is the probabilistic nature of markets. Interacted with some people, say, give me something concrete. Well, I'm giving you the probabilistic concrete answer. I believe that markets must always be spoken about probabilistically and never certainty. But I have, in the action that I've seen over the last 3 months, it was enough for me to be short. My swing long counts had been flat, except for one that was grid botting, and I'm adding to that grid now, nibbling on the long side. Again, tactically, we're just washed out here at this point in time, so I don't mind nibbling, but I'm giving $20,000 room to that trade because of the structure and nature of where this market is at now, that the bears are running it. Okay. The bears are running the asylum, so to speak, and so I want to give them room to take the candles down lower before they get over their skis and need to get fully faded for at least a corrective bounce. So let's see, you got some correct questions coming in. Hey, wanted to ask, since it seems Jason has a different count that could be bullish. As I have been watching Jason's counts, and I have not been able to engineer it to my liking in the same way, so I don't take his view. But because I respect his work, and just for people at home that are not in the service, Jason is my co-lead of the service. You know, and you know, again, to be very clear, I have enough work to do on handling my own charts, and understanding Jason's charts at deep level is just a no-go. Just doesn't work. Elliott Wave just takes a lot more work to cook up the sausage, right? Like, if people that want me to understand his count in a deep level just doesn't understand how the sausage is made, right? So I can't say I have tried to engineer it in a way to my liking, and I haven't found that. But you know, I talked to him yesterday on the board. I think you will have seen that. Like, where does it break? He's very clear, 94K, right? I don't understand why it would break in 94K, because my actually this B right here breaks as a B. It breaks. Let me look at my chart right here, and I would give a 1-2 as he has it room to the same level as I would give my B, which is 84. So he has 94 for his, and I have 84 for my B. And I don't understand why he's sticking to that 94, but maybe it's the 618, and often he does work off the 618 retrace, and I give room to 764 just from my experience, and give my trades a lot more room. So maybe it's that, I don't know. But see, you can see how the difficult it is when you're asking me a question about his count. You should ask him about his count. And again, I'm watching it because he's good, solid analyst. But it may be that I would argue that like his target's way higher, right? Like closer to 200. I would argue from the history that I would be much more of a believer of my C wave in this region. It's really almost the same, C wave region to 140. Okay, so in terms of judging Jason's counts, you got to know his levels, right? He's been pretty clear, 94K, right? Doesn't want to below that. So that's number one. And then number two is even if it shows a rally in that level, he will say the same thing. If it's corrective, he's going to be bearish, right? It's the same thing with me. I'm expecting a bearish corrective rally, but if I see an impulse, I'm going to trade it long, right? So as a little bit of like, how are you playing this? Have you been sitting in the longs expecting 94 to hold? Well, the only problem with that is you're now down $25,000, right? Or 25%, right? That's the only problem with that. And I saw enough bearish action up top to take cover, and now I'm buying. So you can think of it this way: I'm getting long his count, if we like it to say it that way, right? But I'm getting long simply because I see the technical washout right here. So to be honest, you can almost trade either or in this region because of long, but just note whether you're following Jason's count or my count. And I don't care. There's not a popularity contest. Whether you're following his count or my count, if you are believing the long side is if you're leaning as we see another all-time high in Bitcoin from here, you just want to see that that impulsive rally. If we don't see an impulsive rally out of this region, or at least a finished diagonal, okay, which is not an impulsive rally, but is a motive wave, meaning it's going to start a trend. Okay, and we can't have time to like break down the difference between a diagonal and a purely impulsive wave one. You should, if you're a member, you should know that already or be learning it now. You better be cautious about your leaning. Okay, and it's the same thing with me. I have a leaning that as we get into the 83Ks, that the rally out of that region is going to be corrected. Okay, but it does no good for me to hold on to my leaning if that rally is impulsive and clear. And you know what? I'll be in a good spot because I'll be starting to nibble here, and I'll just move from nibbling to aggressive if I have an impulsive rally. So hopefully that unwinds my recommendation, how you should take it from a tactical perspective, that is following his count versus my count. Okay, but to be very clear, I cannot reverse engineer his count to my liking. Now, did I spend hours on it? No, but I spent enough time to be satisfied with my take that I can't satisfactorily engineer it. But that doesn't mean it's not right, right? Like I've said many times, even if two analysts agree, two super competent analysts like Jason and I have you know, if I do say so myself, agree, that does not make our answer more probable than another answer, right? And that's why why the ultimate answer to all of this is, one, the count is not so important, bullish or bearish, as the level we're talking about, 94K for Jason, okay? Mark that, trade that, it's the level, okay? Number two, whether the market behaves accordingly to that count when it hits that level, right? Impulsive rally or diagonal, okay? That is your answer. And if you are going to sit in a position there because you're a believer in this count, you may find yourself on the other side of it where Jason says, no, my count is invalid, right? Same thing with me being bearish, okay? We get a rally out of this region. I don't care whether it's 94 to 75,500 in my situation. Now below 7,500, 500, I don't see a reason to be bullish until it slaps me in the face. But if I'm hanging on to my bearish view and we get an impulsive rally, you better believe I'm going to flip, right? Because the market is king, not me, right? Like, my opinion does not matter. I have to operate on leanings and tactics and all of that stuff. But at the end of the day, it does no good to hang on to a thesis that the market is proving wrong, right? So that is the appropriate way to manage two different views. And I hope that makes sense. And it's just something that each member, I know the members on the board who have grasped this, and they're just making money, and they're excited at every turn because they're very open-minded about what the market might do at each key level. And that is a really good place to be. And that's the same way I am with markets. You know, it's just like trade like Zen. It's like, let the market be the market and see what it does at every key level, and be very careful. I mean, I have a thesis because I need a thesis, but you better believe I'm not going to hang on to that thesis for dear life if the market's proving me wrong, right? So that's just, the theses are just theses. They're not crystal balls, right? Do I ever use the DMARC exhaustion counts? I don't. I have played with them, never developed a skill on them. It's like, you know, technicals, like, and it's not a knock of saying, I've heard, you know, like Avi thinks he's the best technical person out there beside that doesn't use ElliottWave. Like, Avi has said that. Like, I sure, like, I just don't have the skill set with it. Like, I haven't experienced it, but yeah. So yeah, if there's anything to learn from DMARC exhaustion counts here, you know, share. Like, it's cool. I'm open to that stuff. I like to keep my trading very simple. In fact, I have one process for swing trades, which is largely ElliottWave based, and I have another process for day trades, which is largely ICT based. And I do not mix the two by and large, except that ICT doesn't do well with targets in thin air. And that's where I pull for ElliottWave and mix it with ECT, but only a very specific case. Simple, 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 simple wins the game, in my view. Not overcomplexing it with a lot of opinions, a lot of analyst opinions, a lot of counts, a lot of indicators, all of that stuff. In fact, most of the time, except for special cases, you'll see no indicators on my chart on a daily basis, except for, you know, maybe some fair value gap stuff, which isn't really an indicator. It's just painting the way the candles are structured. All right. Let's see. Yeah, no problem. Saif, I think you pronounce Saif. Yeah, I mean, I hope that, yeah, it's like, I see a lot of people on the board like really excited about Jason's count, and my only thing is not to discourage that. My only thing is, let your excitement be an open-mindedness to what happens at your at that point. Okay, like, be an open-minded. I can understand being super excited about a move from 94 to 140, or like Jason saying, like close to 200, right? I can understand being excited. Do not let your excitement, okay, overdo your risk management and your open-mindedness about what the market is doing, okay? And some of you guys don't know what the market is doing because you just haven't learned, but you will learn over time if you watch the market, and you won't learn if you watch the market with a closed mind, right? You have to be open-minded to what the market is doing, sharing and teaching us, because we're not the boss of the market, right? The market is a amalgamation of thousands and thousands of market participants, and we can learn its story by watching it and being observant and being open-minded. It doesn't mean we're always right, but I mean, we're more able to shift with it. So just calm your excitement down and run by and learn to see versus learning to feel. A lot of people want to trade by feel. See, stop on your short. No, 101, Robbie, 101K is the short of my stop. Note that that's really wide now, but I've taken profit down here. So my target is 92, and I'm talking Coinbase per levels, so not spot. 92K, 101 is the stop on that. 101 locks in a decent amount of profit because I think that last tranche was at like 108. But I'm giving it room because when you have bear moves, the whips are big, right? Like the whips we had here and here are huge from a scale perspective. And so we may get some of those big, we may get some big fourth waves in this area, and I'd rather not get thrashed about. But 101, I have a hard time. I mean, if 101, we're back up into this range up here, that means that this impulsive, or this drop down here has lost its impulsive structure. So I don't, that's a good spot to have my short, my stop. All right, hopefully it makes sense. That would be a give up of a lot of profit, but at this point I don't care. I got a heck of a lot of profit out of last year. At the same time, I'm nibbling on longs, so those longs will be immensely profitable when that stop is hit too. So I'm kind of trading both sides of the thing, trying to get my nibbles on the long side as low as possible, while my shorts went in pretty darn high in the range, like started at 114 and added in the 108 region. So done very well on the short side. What is ICT? ICT is, someone said it stands for inner circle trading. It's all over the internet. Just look it up. It's it's sort of a philosophy around like intraday liquidity. I think it's pretty bad for swing trading to a degree. Most ICT people don't swing trade with it. That was my experience. I do some things with it from a swing trade perspective. I also use Elliott Wave. But Elliott Wave patterns, there's a couple of things with like intraday futures, like, which is what I trade, mostly RTY and natural gas. And there's a couple things like the institutions have like a schedule. They trade the first hour largely and the last of the hour. And so I determine bias a lot from how the 1 hour action goes. And then the second part of it is from IT perspective is where's the liquidity regions, and then what's called a liquidity raid. You can look it up. I think sometimes it's called the turtle soup setup. And then where fair value gaps are, like our supports in the ICT realm, as well as they work for targets too, in inversion, reversions, and like anyway. Like you look it up. There's lots of videos on it. I can't send you a particular person out there. I've read multiple sources. You know, just because I've had success with it doesn't mean you will. The reason I got into it is because I'm terrible with Elliott Wave on an intraday basis, and I started seeing a lot of things on. I see a lot of distortions of counts on intraday basis in futures, and so I wasn't pulling it together. And I've become successful with both ICT and kind of an institutional mindset, which is like there's this trade schedule that happens, and looking at it from a time perspective, which I don't look at time from a swing perspective. Swings either work fast or slow, I don't care. But from an intraday perspective, it's like the prime brokers are active in the first hour and last hour. And so you can learn a lot from observing the first hour and last hour of action. I don't tend to trade after lunch, New York lunch. So all I really care most of the time is how the first hour works itself out. Anyway, so that's all. Like you can look it up. It's a good exploration to check out ICT. But I'm not recommending it to you because you may or may not gel with it. I'm a member, yes, who know the levels mentioned 98, 5K to watch, hence I asked. Yeah, totally. Like, yeah, if you guys are, like I always say, I just preach this. It ain't the count. It's not the count, bullish or bearish. The count is a process by which pivots are identified, right? Trade the pivots. Don't trade the counts, or the levels that the pivots reveal, et cetera, et cetera. You could swing it any other way, but like people get tied up into the bull move or the bear move. It's going up, I want to be long. It's going down, I want to be long. That's not the point, actually. It's if it's going up, where can you get cheap risk? If it's going down, where can you get cheap risk? And that's where you got to dive into levels and understand the levels, because you want to be trading near the levels. You don't want to be trading far away from the levels. Why? Because your risk is wide, right? Risk is wide is fine if you're cognizant of what you're doing, but the wider your risk, the smaller your position ought to be, because believe me, the market will hunt your risk. Right? The market will hunt your risk. And if you are big and wide, you are going to get blown out, right? So if you're going to be big, go tight, but tighter your stops are, the more often you're going to get stopped out, right? So You know, the one thing, I'll give you the one thing that made me a more successful trader: trading smaller and wider stops. Wider stops, smaller size. You know, you think, you know, a lot of people think that okay, I'm gonna make more money if I got more size on. The opposite. You know, become more consistent with smaller size and just build slowly. That is the path to successful trading. Just, you know, there are other things too, but that's, you know, in a nutshell. All right, any other questions about Bitcoin? Bull bear market, you understand? My lean towards a bear market, but again, waiting for the market to tell me otherwise. So far, the market's giving me like way too much confirmation bias, right? The market has done what I have expected it to do. That is dangerous to me because it's building that confirmation bias. It will be harder for me, and I'm recognizing this and being honest, it'll be harder for me to see that impulsive rally, honestly, because of my confirmation bias. The market has basically, quote unquote, proven me right so far, right? And I'm saying that with tongue in cheek because I don't care about being right. I care about making money. And but it's funny that way. Like, I'm trying to be very aware that the confirmation bias is working in my favor, and that's bad, right? Because it's continuing to train me that my thesis is correct. And you know what? The market then will like to give me a nice big whack across the head, right? So just, you know, like that kind of mental exercise where the market, you know, asking yourself, you know, what's going well, what's going right, and whether it will continue to go well is a very good mental exercise, right? Because the market likes to surprise even our best intentions and even our most wise moves, right? So, all right. I'm gonna go on to Ether. If there's any questions about Bitcoin, we're keeping this simple, right? Bitcoin, Ether. We want to go back across, come back to this one, no problem. We got some time. All right, so Ether. Like, there's a lot to be said about this chart. I mean, first of all, as I've said. So first of all, we've broken where Bitcoin, where Ether has, or where Bitcoin has. I have this level of 75,500, which is my confirmation of a bear market. In Ether, it was 3370, and we toasted it. Why? Because we had the end of this diagonal is a three-way move, and it's now confirmed three-way failure. Therefore, this move should be over. There is an alt in here where we get a B, another C. It is proportionally weird. It would be proportionally weird, so I'm not a big believer in getting it. But again, the same thing, probably shows around 2300, get an impulsive rally. Okay, maybe now we can finally get to that move to 6K, which is so far failed, and you know, even out, you know, way outside my expectation, but 10.5, which is the old target, which is completely failed, right, by 50%. So very interesting chart, and very interesting chart. If this is the end of Ether's cycle, it barely got an all-time high from 2021. So it's a really, like, you know, Ether was the first crypto that I made a lot of money on, like where I saw the insane power of crypto returns. And you know, this is like an old friend to me, but this is just weak, totally weak. So hey, we'll see. Like, you know, I'm always welcome. I put this red on here also as a like maybe a what if, because if this is a leading diagonal, okay, bear with me, 5 waves here, which, you know, right now I'm calling it an end diagonal, so the end of the entire cycle. But if it's a leading diagonal and we hold a 2, which would be dead at 1280, maybe it's a 1-2. The problem I have with this is this target above this yellow box is like very unbelievable, which is 24K from an LEWA perspective. It doesn't work. So I don't expect this. Could it be an A, B, C? Okay, then maybe if this is a B and we get a C, which I can see cause for that. And looking in the, you have to dig into long-term history of Ether for that. Maybe it gets up to 10K, and that would be not outside the normal. So there's going to be some areas of Ether. So by and large, this diagonal appears done. Okay, the diagonal, which is the entire weak sauce rangy move from the 2022 low to now, which really got nowhere, right? Like in terms of I mean, you know, it had some good returns if you were range trading, but basically got nowhere. Almost took it out here. Excuse me, still getting over my cold from Paris. You know, if this is the end of the cycle, it's weak. This is weak sauce. So I'm watching for it, you know, anywhere from 2300 to 1200. But mark my words, I don't expect it. Again, back to everything I've said over the last hour or last half hour. I don't expect it, but better believe I'll be watching for it, right? Because if it is going to make a move like that, I would love to be in it, right? Because it would be nice to finally get that surprise when everyone's turning bearish, to get that surprise move from, say, 1,200 to 1,700 roughly to 10K. That would be beautiful, right? So I would love to see it, but I'll be really, really honest. I'm forcing this in. And why am I forcing this in? Because it's so weird to see something have such a weak new all-time high in a fifth wave. It's really strange. Truncations happen in Elliott wave thought, where the 5 actually doesn't even get over the wave 3, which is not the case here. So it's a thing, but I rarely see it in crypto. Like I most of the time I either see a 3-wave failure, which is actually 99% of crypto, ultimately ends and demises that way. We have a ton of altcoins well celebrated this year that have put in confirmed 3-wave tops. Some of the ones that some of you guys love at home have put in 3-wave tops already, and I'm done with them. But this one surprises me because it's a major, right? It's like number 2, and it has not really pulled it off. So we'll see. I'm forcing in a chance for it. It's not, right now we've got pretty much a confirmed 3-wave break of a 3-wave, and 3-wave is expected, so it's not like I expected impulse out of this. It was, it was a corrective range and started with 3 waves, so I'm not surprised that it ended in 3 waves. That's normal. But the weird thing is just how lame it is. Like I wanted to see another leg push higher into 6K, and right now it's off the table. The immediate move to 6K is off the table until something else shows. So, all right, that's where I'm at on that, and that's all I've got to share. Let's see what other questions you guys got. And if you want me to go back over some of these charts, let me know. So make it sense. Okay, I think this is a question. Make it sense for Bitcoin to bounce to 115. Does it make sense for Bitcoin to bounce to 115K? It may not. It depends on what's happening here. Whoops. I lost motive wave. It shut down on me. Give me a second. So it may not. Depends on what happens. I mean, it depends what happens here, right? If we get impulsive rally, then yeah, it'll easily be up to 115 and go on beyond, right? But if we're coming down, like say we break. First of all, where do we bottom, right? I mean, if we were to bottom here, a bounce to 115 is not much, right? Especially if it's impulsive. But if we're going all the way down to 7,500 and then the rally ends up corrective in this B, I doubt it gets to 115. So it really depends. Really depends on whether the market's going to have another leg higher or not, which I can't predict. I can, take the stance that I have right now is I'm very open to it, but I'm not going to know that that's in play until I know what that first move off that low is looking like. So I wouldn't be holding out for 115 right now, personally. I certainly am not. But in terms of my nibbling, like my nibbling of longs in this area, like they're short-lived. In fact, I have some of the longs I took yesterday. I already have a sell order at 99. Okay, which were it was made, the buy was made around the low end of 96. So only 3,000 is all I'm expecting out of that first nibble. And as I get lower tranches, I'll put there'll be some sell orders between probably 95, which we're already above right now, but if we get down into the 80s, I'll put sell orders at 95, and then some maybe just above 100, and that's until it's clear that we have an impulse. We have an impulse, then I'll turn off all the sells and then look for buying pullbacks. Okay, but I would not be holding out for 115K right now, personally. Again, we'll just have to see. I can't say it's not going to happen. I'm just saying, if you're expecting it to happen, then you may be disappointed, possibly. Okay, that's about all I can say about it until we get more action out of Bitcoin down here. Any other questions? Going once, going twice. I mean, I'm gonna hang up if you guys don't have any questions. So let's see. Can Bitcoin wave 5 from 84 to 140K be an ending? Yes, it can be an ending diagonal. In fact, I can argue that we've had an ending diagonal from all the way from it's a little bit of this, a little bit of that in terms of structure, but I can argue and have argued and in fact, I think my count reflects that. I have to go back and check all of it, whether it still reflects that, but that the move off of 2023 low at 15.5 is a ending diagonal itself. And that would actually suggest that the move from 74 or whether it be 84 or 74.5 to 140 is actually an ABC. And if it is, then I would still expect an impulsive A. So it doesn't matter too much. But a three-wave A is fine, is okay. That would make it trading a little harder. But we often see impulsive A's of late. So in Bitcoin, so I would expect to see an impulse regardless. Okay, so yeah, it's for sure could be an ending diagonal. I would argue that it would actually be normal to be an ABC. But you can see I'm very loosey-goosey about the overall structure off the 2022 low. I don't like actually pinning it down, and I move with it as it goes and count it accordingly when I see. But I'm open to finding all of those things. The thing is, once you have a move off the low, once it breaks the 764 retrace of it, 99% that move is starting to fail already. And so so once we get a rally off of it, you can do this at home. And I use log, I don't use linear fizz. Once you get a move off that low, once you hold the 764, then it's failed. And you use an example, someone was sharing with me a count where this was a 1-2 here. I think it was like 1 here and something in here was 2. I think it was there, or maybe it was here. But that count was, and when that count was being presented to me, it had already broken the 764 retrace, which is like 99% failure. That's the wrong count, okay? And it certainly proved to be incorrect, okay? I didn't get on Twitter and call that person's out because I'm not interested in that. But when you retrace 764 of any rally, it's not a 1-2 or an AB or anything most of the time that you expect higher highs. Every once in a while, and I'm talking like 1%, you could break the 764 retrace and come back. And, such that when I see a sustained move under the 764 retrace, I'm out, done. And then if I'm wrong that one time, that 1 out of 100, I will respond and get back into the market. But most of the time, I don't need to lose another dime on such a failed setup. So that's one thing we could see. My point is, when we come off whatever low we find in here, again, I'm open to lows between here, given how washed out the technicals are. I'm open to lows from here all the way down to 75,500. Again, what's going to determine the difference is really the sellers, whether they're going to exhaust out early or they're going to end up reaching peak levels of fear suddenly. That'll determine the range. And when we get into that level, any rally, okay, if you think this is the rally, okay, just please pull out your fib tool, check out the 764, okay, on log scale. And if it's sustaining under it, okay, you can let it breach it if you want, and often I do, but once it sustains, has the day close underneath it, or puts in a candle below it and then comes back and then breaks it again, like any of those situations, do yourself a favor. Okay, you can always get back in if it's just a tease, but the setup, the rally is dead. Not getting 99% of the time. Okay, I mean that's not meant to be advice. It's just this is well-worn experience in that regard. Okay, all right. Any other? Let's see. Oh, you guys got a lot. Let's see. Looks very bad for BCC bulls. Yeah, it does look bad today. It looks bad today, but we still have a lot more to work out, right? XRP insights. I don't trade XRP actively. Some of our members do. I don't remember where. I know it was over like I had like 190 support or something like that. Maybe someone could tell me. Again, I'm not a fan of the chart. The big easy money move was done like months ago. For sure, and right now it's just like it's trying to get a fifth wave pulled together and struggling with it. I don't trade fifth waves aggressively, so in assets I don't care about. So like I don't really have a strong feeling about it. I was looking at it yesterday and I'm going, yeah, this could easily roll over, but I can't remember the support level. I think it's like 190 or something. It's not a fabulous chart, but can it put in a new all-time high? I think it still can. But again, who cares about what I think, right? Like it's the level. And again, I can't tell you what it is. I don't have it open. altcoins complete rug pulled. I mean, all the altcoins are, what's interesting about altcoins this cycle is how dispersed the returns are. Some of them never got anywhere. So a lot of them ranged, a lot of the old ones ranged. And then you have the meme coins that were hot for a while. And that, I think the meme coin season is totally dead now, from what I could tell. And then, you know, maybe we get some altcoin season of some sort. But I would think with what we've seen is that that altcoin season is going to be very selective, if it even shows up at all, right? So, I mean, because that's been the cycle, and I was waiting for this type of cycle because there's just too much market cap to hold all these things up. Too much market cap of garbage, you know, and some of these projects are just zombie projects, and the market can't hold up all that crap. There is enough money, and you know, and another thing about the space is what happens every cycle, right? Retailers get excited about meme coins, stuff like that, and then they get over their skis, and then they go from rich to poor super fast, and then they can't participate in the next one because they just screwed themselves over. I mean, that's just the way this market rolls, and we're seeing the results of it with this sort of weird altcoin season cycle that really got hardly anywhere except for a few key choices, right? All right, anyway, the crypto fear index is now 10. Yeah, to be clear, I don't put too much stock in that as a trade signal, but I'm not surprised that it is, given the level of technicals and the washout that's starting to happen. Although, you know, again, the washout to me has only begun, given where RSI is and given that the pattern down has not completed yet. But again, I say that, and I'm still open to, you know, finding a bottom today if it did. I don't see any sign of it. I don't see any action in the charts that suggest that the bottom is there. I'm just saying that I'm open to it. All right. Any other questions, comments? Going once, going twice. All right. I'll sign off. Video wise, if you're on ElliottWaveTrader, you'll see it today. I will do my best to get it tweeted out, but it'll get tweeted out to you folks that are coming in on Twitter shortly. I just don't know if it'll be today or sometime this weekend. Happy trading, stay safe. You know, and again, if you want to pay us a visit, pay us a visit. I'd love to have you, and we definitely want to be navigating this market over the next few months. It's going to be a very key point. All right, talk to you guys later, and happy trading.